What is going on, everybody? And in this video, we're giving you a state of the market in stock picks for October 6th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market in which we reside. So, before we get started, one thing I want to go ahead and throw this out there is I will not be making a video tomorrow night because of the fact that I will be out of town. So I won't have a video. I won't have a weekly update going into next week. I will try to get that out to you potentially late Sunday. So I might have one. Just have to see how the way things play out. But nonetheless, we'll get videos out towards you, especially because next week will be a big pivotal week. Don't expect much tomorrow, as we do have non-farms tomorrow, but I don't think it's going to have a big impact on the market. I think the market is waiting for the core CPI next week, as long as some earnings. Now, with all that being said, today we got some data essentially pointing that U.S. mortgage rates hit 16-year high of 6.75 on 30-year fixed rate mortgages. So the demand or the applications that have been going in for new homes have dropped dramatically. So the things we've been talking about are playing out. Services is continuing to grow at a rapid pace. Something to talk about services and rentals are going through the roof, and an understanding that this is where your inflation is going, because services are charging a ridiculous amount because people are trying to dial back from gas prices and anything else that would alleviate some of the stress on everyday life. And so with that being said, there's still a lot of concerns here. The problem is that we are not the problem, but we are essentially pumping right now because of this thought that we're going to dial back. And then you had Fed members today talking about that's just not going to be the case. So again, you have to be very careful on these pumps. These pumps are very, very misleading. And unless there's strong data to back that, I don't believe there will be any kind of pivot until that happens. And you have to understand that inflation just isn't going to go away. Even if it dials back, that doesn't mean the Feds is going to have any kind of relief anytime soon, at least not in the next report or two, I don't believe, because we are going into the winter months, and knowing that the demand for oil is going to go up, and everything that is going down with the recovery down in Florida, all the demand coming from that as well. So we're going to see a huge spike. We may not get it next week, but we're definitely going to get it in the following month, core CPI. So just be mindful of that. But what we're really going to see is where banks stand, where semiconductors stand, and where our core is next week. So at that being said, technical wise, it kind of makes sense why the market is essentially kind of floating around this area. Today, it really wanted to sell off. Thing key is we don't want this back below essentially this the 3684. We don't want it to break back below that. If we do fall below that, we're going to definitely, I think, break for a lower low. But at this point, if we do gap up over essentially the 3800, we can get a nice little run back up to here, which is funny because it seems almost every earnings cycle we find our way back up at this trend, only to get bad news and sell off even more. So that could potentially play out, or again, we could just sell into Friday in anticipation for core, break below this, and see if we're down here by next week with core and with earnings. Again, if something happens positive with earnings, I could see us running. As long as core holds, that could be taken as a bullish sentiment, in my opinion, a very temporary sentiment. So you have to understand we have monetary policy coming in next month, and then you get another core CPI as well, and you have to understand that core, I think, is gonna be pretty bad. And next one, this one, we might get some relief. The last one I thought we would get some relief, and we hardly even budged. So that's where I'm coming from. So again, if we get another one that's roughly around the 8.5, that can be very concerning as we keep throwing on these rates, and nothing. There's not a big impact on inflation, and so. And again, this is what I've stated, and something I continue to want to push out and educate is that only certain things have pivotal weight. None of those things have played out. You've come in a lull. You've come in essentially at a point to where um, the central banks, had to do something, and so they are pumping the media that quantitative easing is something that is necessary. Even though the rest of the world is screaming at the U.S. that they need to stop raising rates at such a rapid pace, the U.S. is going to ignore them. The U.S. is there to do minimal damage for the U.S. They have to keep raising rates. If they don't, at least for the next one or two monetary policies, you could see inflation run well past 15%. That is a concern, and that is what the Fed does not want. So you have to understand where they're coming from, and in doing so, to try to combat a 15% inflation rate, they have to go extreme. And yes, you're receiving. The problem is the administration is pointing you to reports that have taken out a lot of the major core inflation, and understand that the price in which it costs to live is rotating, and not just by a little bit. You had a little bit in used cars, and it kind of spiked massively with food and energy. And then now it's rotating into your home in rentals because everybody's trying to liquidate. Because this is something I really want to watch during this earnings cycle is credit cards. How much growth rate does credit cards have? We saw in the last one that is 35% growth rate. What is it going to be this past quarter? People have been living off of credit cards. Do we have another quarter or two before people start claiming bankruptcies, and then you have essentially a mortgage crisis, right? And people can't pay their mortgages, and rents continue to go sky high because that's all people can do is rent. And then you're going to get tons of people that could potentially be living on the street because there's no place to live because just rent is just so high. Because it is absolutely absurd to be able, if you make a very good income and you have a lot of reserves, a lot of capital, it is still extremely hard for you to buy anything, any square footage wise in this career market with these rates at where they're at right now. It's absurd to qualify. What you could have qualified for 8 months ago, you could qualify for a really nice, 2,400 square foot house for hardly anything. Now you'll be lucky if you can get 1,200 square feet as opposed to the 2,400. And so for half of what you got square footage wise right now is costing what it cost 8 months ago for a 2,400 square foot home. This is what it was happening. And again, it's going to continue to rotate on whatever comes of May, right? People are going to have to adjust to the inflation, and this is why you see inflation pivot, because people are adjusting, and then everybody catches on, and all the demand goes into that sector, aka rentals, aka services. And then when that is so sky high, they can't afford it. They find something else, and if there is nothing else, then they are finding that they are burning their savings rate, right? Our savings rate is absolutely absurd right now. People came out of the pandemic and started spending, rightfully so, right? They've been locked away for 2 years, and we had some great savings rates during the pandemic. And now, people went on all extravagant trips over the weekend, over the summer. And then now there's some major issues making surge. Now we're starting to see over the past quarter, we've been seeing liquidation in housing and everything else to try to cover costs because people are getting laid off left and right. Non-farms, if non-farms are really good, I could see us potentially running at least up to again roughly around that 3,900. It's not going to be so pivotal. It doesn't matter what we run tomorrow if we do run, because we have the core. And if the core comes back and says we are 8.5 or we're over 9.1 or back around 9, this market is going to crumble. And then you have earnings, you have banks are already folding, they're laying off heavily to try to make a profit. If that's not screaming something is a major red flag here. It's not saying that every company, right? But the things to keep on watch here is, how much are these big corporations dipping into essentially their savings and their essentially their free cash that they have, and understand what is going on, because we started seeing though those are the cracks I was talking about last quarter. Now we're going to really see and then realize that in the next quarter, the fourth quarter that we're currently in, that we won't report until the beginning of Q1, which is in January, is going to be extremely bad. And I think that on top of peak inflation is going to make us absolutely crumble in February or March. And then at that point would be the pivot to move back up. And it's not going to be a smooth pivot. Now, this is in hopes that none of these other black swans play out, but a lot of these are accelerating very fast, a lot faster than I thought they would. So again, you can't be caught off guard about what media, about what CNBC is telling you and all these things. The biggest thing to understand here is that these corporations you're getting misled looking what the real problems are. And it takes a while to be in the market to really understand, watching price action, watching events, specific events that change. You have to understand these events, they change depending on the sentiment of the market. Currently, right now, we don't care about elections. In a normal cycle, elections would matter. Here, they do not. Nothing matters but the Fed and inflation. Monetary policy. What is Powell's next move? Where's core inflation at? How much does it cost to live? Is what we're getting at here. Let's try to break it down to the basic necessities. What does it cost to live? Is it cost for you to live? Is it changed the past month? And it certainly has, because rentals have not just gone up $100 or $200. They've gone up a couple hundred, if not 1,000 or more. That is the issue. And it's not just going to go away. People just aren't going to stop trying to rent or live in some place or trying to liquidate because they lost their job. That's just something normal that people try to do to try to cover what is potentially going to happen here and will happen. It's just a ticking time bomb, in my opinion. And what you're seeing is headline news about pivots and everything else. Now, we are currently in an earnings cycle. Earnings cycles will pump essentially no matter what. It's just a normal cycle, and we are seeing that, but it is very limited. It has to be what I'm seeing this past year is it has to be a window where there's no monetary policy, there's no Powell speaking, and essentially there is no actual earnings, but is the leading up to earnings that we are pumping, and that's what we're seeing. If this is the pump we're getting, it is very weak. If we can't break above 3,800, that is extremely weak, and there's a lot of fear in the market. Again, the market wants to know what's going to happen in the next 6 months, and the next 6 months do not look good. At least the next quarter anyway. After that, well, then I could pivot and think we were going to go back to the upside. But again, that changes on what I see in the market. But price action wise, we are pushing for no real reason. There's still tons of bad data. And again, Europe is on the cusp of folding, and their financial system is crumbling and being patched together by duct tape, and eventually it will fold. And that in turn will take everything down with it. And to think that it's not going to affect us is, I think you're not doing yourself any justice, because you can only ignore the world for so long, but you have to realize that you still rely on the world. And yes, you're trying to help the U.S., and you will to an extent, but you have to understand that it will still affect us. I still believe we have one extremely strong leg down, and then from that point, we pivot. But we have to let the other foot drop, and the other foot just hasn't dropped yet. It's been hovering there, and there's all these other essentially diversions to try to hold that foot from falling. But it's only a matter of time before it does. And when it does, I'll be ready. And then from that point, I think we could potentially reverse at that point. Again, if we have multiple black swan events, it could change my sentiment and maybe we continue to sell. I don't know. But the thing is, you have to be very adjustable in this market, and to think it's just black and white, it is not. If it was black and white, everybody would be making money in this market. It's just not the way it works. And cycles are always different. They're not the same. I've never been in a cycle that has had so many potential black swans. And I'm not just talking about little black swans. I'm talking about uh, destroying financial system black swans is what you're looking at. Again, 2008, it was one pivotal event that took down the market in the housing sector. Now you got that plus energy, plus Europe, just financial system completely folding on itself, plus, like I said, housing, plus energy costs, plus natural disasters, right? Inflation. There's a lot of different things, and who knows what else is currently out there that we aren't aware about. And that's the one thing that's even scarier. If something comes and shows its face that is very left field that we aren't ready for or aren't seeing, the market's just going to fold, and who knows how much further we're going to drop. So, after my little rant, even though it was pretty long, so that's what we're watching. Again, by Friday, we need to be above this 200. If we break back below this is very concerning. That I think we're going to head for a lower low. That's not saying again we can't pump and then start hitting down, then finally break it and head all the way back down. Strong possibility to try to get a earnings rally in before next week in the core. And then we get all the bad news and just completely flush all the way back down. Strong possibility. Again, anything is possible. We could just open up down here tomorrow and bounce and continue to just bounce back and forth, or hold this range right now is a possibility. Kind of what I'm thinking, we might just hold around this 200 EMA daily. A strong possibility. I think we could hold. I'm actually surprised we did hold today right here, but it is definitely trying and seeing what we're going to do. So again, interesting spot. We're holding below. So Bitcoin, again, I'm not going to go over Bitcoin. Bitcoin is going to follow the market at this point. So the dollar is still very strong. Now, if this is a break right here, setup technical wise, this looks like a perfect breakout, at least for a 75% move back up. So you got to watch the dollar. I think the dollar is not done pumping. I think the dollar still has a good solid way to go before we see any reversals. So we'll have to see how that does play out. Oil is still sitting around 88. I think oil still has another huge spike in it. OPEC was on today. It was interesting to hear into that meeting as well. That's the first time I really listened in. I've listened in previous times, but very concerning there. And they're pointing that they should be in food and not in oil, because food is just absolutely absurd, and the growth rate and stuff that's going on with food right now. So being said, again, you have to consider that to grow the food that you eat, it costs. There's other supplies that are needed to do those things. And so understand that fuel cost plays a huge part of it. Even though fuel has come down, they're still taking a massive grunt and they're not making any profit. So farmers are essentially having to shut down the farms and then move into the city, because they can't afford to maintain it, because fuel prices are still just way too high. Yes, oil has come down, but they're still extremely high. So being said, Tesla and the Twitter news has just been out of control. It's somehow holding the 140 mark or the 240 mark here, but we're looking for this to break. Again, I'll be looking for Tesla around the 220, and then potentially even the 207, and then you have support roughly around that 200. This is probably actually moved up, this EMA monthly here. So want to keep an eye on Tesla, BA, looking like in the market. Again, just waiting for that next piece of news to determine if we're going to go up or down. The banks do not look good, to be honest. The fact that we kind of retested and rejected, looks like we're getting a retest after end of day here. If this thing rolls over tomorrow, could start selling again. Technical wise, the market looks like it could start selling. The hard rejection I was expecting today, it started. but then we pick back up because I think the market again is in earnings mode right now, in anticipation to try to get some sort of run before, trying to get some sort of cushion before the next blow potentially from core CPI and earnings. So we'll see, but this looks like it wants to roll over. Again, all the banks are looking the same at this point. Retest 50 EMA. It looks like it's getting ready to roll over at this point. Bank of America, not the greatest, but same scenario. All the banks look the same. So that's pretty much what I got. Things are. It's going to be really important where we close again on Friday. Again, if we can't hold that 200 EMA weekly. Again, you got the rest of the week. You got 2 more days to try to hold above it. If you can't, that is concerning. That we're going down lower, and rightfully so. If core, even if we pumped, if core comes in anything over 8.5 or close to 8.5, the market is going to go insane. Because right now the Fed futures are pricing in. They're trying to assume that it's going to be lower than the 75. It's going to be 75. At least in my opinion. Again, that can change, but I'm strongly, heavily weighing on another 75-point basis move. And again, if we come over 5% on interest rates, I have to realize that it takes 10 years for interest rates to come down at that point. So still a lot going on. Average recession, again, 43%. We're only seeing at 25. So I'll leave you with that. And again, I will see you guys hopefully here on Sunday night. I'll try to get out a weekly update video on Sunday night. If not, follow me on Twitter at Hemi137. I'll continue to try to do daily updates there for Friday. And then also, if I can't do it on Sunday, the weekly update, I'll try to do some periodically throughout the week, the weekend, or primarily on Sunday. To kind of inform you what's going on. And then Monday, I could do like a weekly update for that video to kind of get everybody up to speed on the week and what we're looking at. Again, the core isn't until I believe on Thursday, and then earnings don't start until the banks don't start until Wednesday, I believe. So it's more than enough time. It gives you another day and stuff. So just be well aware. I've been advertising this stuff. Again, I don't think anything's going to be pivotal until next week. So at this point, really doing extra videos like this. I kind of repeat myself a lot, and you're probably tired of hearing me, but nonetheless, that's where we're at. And take advantage of what's going on right now, because you won't get great companies at such a great price, but also understand that it's not going to be a quick recovery from this point either. So even though I do believe we can recover quickly, I think the next quarter, we have to get through Q4. I think Q4 is going to be the nastiness. And then I think we can start talking about recovery. So with that being said, drop a like. Until next time, I'll see you guys later.